the gatekeepers, the power brokers, the finance system always had the advantage over us. The Web3 companies, they took our data and monetized it. And here it's been given to us. It's like the internet's been given to us and we've got tokens to make us rich out of it. It's like that's what's happening, and we're broadening this wealth. I mean, we're only a $3.5 trillion asset today. I think we're going to 100 trillion in 10 years. So we're only 3.5% of the way along the journey. This is the biggest, largest redistribution of wealth in all history. It's underway.
Raoul, CEO of Real Vision, reveals that with crypto currently at $3.5 trillion, it's just 3.5% of a projected $100 trillion wealth explosion. For years, wealth has been controlled by the financial system and Web 2.0 giants, but Web 3.0, powered by crypto and blockchain, is changing that. The next decade promises massive growth as crypto takes over as a wealth-building platform. Stick around for more insights from Raoul on the explosive crypto future ahead.
2008, we blew up because of too much debt. And every major government around the world said, the answer is we're going to reset interest rates to zero so we don't have to pay the interest on the debt. They did that for 10 years and they reset all of their debts. They got their house sorted out by saying, okay, every 3 to 5 years, we'll repay our debt. And so that 3 to 5 year cycle has created the Bitcoin halving cycle. It's the same as the presidential election cycle, and it's something I call the everything code cycle. And each time we get close to that rolling of the debts, they have to debase currency by adding liquidity, because there's a lot of bonds you need to issue, there's a lot of payments to be made, and that drives the crypto cycle. Crypto breaks down, as all macro does, into 4 cycles because of this massive phenomena that's been going on, which is, we start with spring, which was 2023. And 4 years prior to that, so 2016, hold on, let me think about this. So 2023, 2022 was the end of winter, 23 was spring. So whatever that was, 19, and then 16. So those were the springs, and that's like spring. It's kind of, you're not sure the weather's going to be good. It might snow, might have a storm, the sun might come out, but normally prices start to rise because liquidity starts coming back into the system. Then by summer, which is this year, which was 2020, liquidity starts to flow, prices start to rise, confidence starts to build, you start to make a lot of money. And then we go into fall or autumn. That's the final year of the cycle, and that's when things tend to go bananas. It starts at the back end of the summer season, which is now. So we've been starting to see bananas, price rises and all sorts of stuff. And then next year, we get the final swoop where everything goes exponential. And that I've just called the banana zone because it looks like a banana on the chart and everything goes bananas. And it happens every 4 years. And it's kind of the biggest gift that we ever get given is this fucking thing. If we think about one of the biggest complaints that we've had is like the gatekeepers, the power brokers, the finance system always had the advantage over us. The Web3 companies, they took our data and monetized it. And here it's been given to us. It's like the internet's been given to us and we've got tokens to make us rich out of it. It's like that's what's happening, and we're broadening this wealth. I mean, we're only a $3.5 trillion asset today. I think we're going to 100 trillion in 10 years. So we're only 3.5% of the way along the journey. This is the biggest, largest redistribution of wealth in all history. It's underway. We're using speculation to create capital formation. That's what financial markets are. This is just a racier version, right? But that's what all capital markets are. So we're creating capital formation, and you know the DeFi. I mean, I talked about it in the last cycle and said this is coming. This is a way of getting people together. A DAO is a structure by which you can get together scientists under a financial incentive structure. You could have a token. So we talked about it. Didn't happen. Now we're seeing the early stage. By next cycle, it'll be the main thing, and we see this every time. Like I've talked about NFTs for ticketing. We talked about it last cycle. We've seen some people launch this cycle. By next cycle, it'll all be NFT tickets. It just takes time. But what we're doing is testing capital formation ideas in all sorts of ways. one of the things we're looking at Real Vision is tokenized crowdsourced asset management. We're a hive mind. We're all grinding, trying to stress test our ideas, form communities, do stuff. In the end, we've all done pretty well from being part of this big community, and we can completely destroy the asset management industry by decentralizing it.
The 2008 financial crisis reshaped the financial world, setting debt and liquidity cycles that align with crypto's growth patterns. Spring's growth, summer's excitement, fall's rallies, and winter's reset. These cycles, tied to Bitcoin's halving, create massive opportunities. Web3 is now revolutionizing wealth distribution, with crypto poised to grow from $3.5 trillion to $100 trillion. Raoul advises focusing on the long term, managing risks, and sticking to reputable coins like Bitcoin and Ethereum to navigate this historic transformation. Stay tuned for more insights.
There's a lot of ideas that get tested. I mean, the big thing for meme coins for me is something I was involved in from last cycle, which is social tokens. People didn't really understand it yet. Part of it is like intellectual property, brand, and culture doesn't appear on a balance sheet of a company, so it's not really valued. Like Disney, like it's like a $90 billion company. What's the cultural value of Disney? $1 trillion? $2 trillion?
Yeah.
But they haven't tokenized it. But tokenization allows you to tokenize culture and brand value and stuff like that, and it becomes a tangible on the balance sheet, not an intangible. So I've had this thesis for a while, and this is what meme coins are, is the ability to create community money and incentive systems around a commonality of purpose. So we're seeing like DeCi is some of that. We're seeing like things like Forest, which is now a charitable thing about regenerating woodlands and forests. It's this, how do we coalesce a group of like-minded people with a like-minded idea and inject capital into it? I think it's going to, when we get to an AI world and we're all sitting around thinking, what the fuck do we do here? We will find that doing what you and I do, which is being part of communities, pays. I mean, it does pay already because, community is what giving us some alpha. But if you're a Taylor Swift fan, or let's say Taylor Swift 10 years ago, and you kind of discover her, and you can get tokens or NFTs or whatever that allows you to participate in that ecosystem, and you can help it grow by telling your friends, that incentivization grows these massive networks, and people can make a lot of money. It's this concept of universal basic equity. We can participate in cultures. That is what meme coins are doing. So this is going to be much bigger than anybody understands. But trust me, in a year's time, we'll be hated online for ever talking about a meme coin. You are scammers, you deserve everything you've got. It's like, they don't understand. It's all going to come down to liquidity, because liquidity is the dominant factor. What was unusual about 2021 was liquidity peaked early, because they jammed it in 2020, and then they started taking it out. And it peaked in March. Normally, liquidity peaks in August, September, October, November, which is why the cycles are longer. So that's all I think we need to know, is when does the business cycle peak? That's the other thing. I use the ISM survey. When that peaks, the market usually peaks around that. We haven't even got off the bottom yet. So we're still, the ISM is below 50, which means most of the economy is still not even really functioning yet. So we're a long way from this. But I understand people have PTSD, which is like, the best answer for that is take some lifestyle chips off on the journey, but don't trade your whole bag, and try and think in multiple year time horizons. Think about this 2030 time horizon. Say, listen, I've got to be in the technology. I'm going to have drawdowns. I'm not going to do stupid shit. I'm not going to be 100% in meme coins at the end of the cycle. That whole don't fuck this up thesis. Just be sensible. Everyone will be fine. And if you're really just going to reduce risk and hold, just Bitcoin.
Yeah.
Or ETH plus staking yield,
Yeah.
But don't fuck around with this other stuff. Your chosen token, this is going to be the one. Probably isn't. The easiest trade is the second cycle trade. The Solana this time around. Has it done well? You know, is the community still there? Does the price start performing in outright terms, and then versus ETH and Bitcoin? Yeah, that's the trade. The trade is not to be brave in the bear market and hold the riskiest stuff all the way down. Because it goes down 99.9% half the time. I mean, Solana did. I mean, Solana was
$8 Solana was a bit scary.
97.5%.
Yeah.
We all went through that. That was a hell of a drawdown, and it still worked.
Crypto analyst Benjamin Cowan warns Bitcoin may face a significant price drop soon. He notes Bitcoin is currently overextended above its 20-week moving average, signaling a potential correction. Cowan predicts a pullback to its bull market support range of $72,000 to $80,000, with the possibility of a deeper dip to $60,000 before rebounding. Drawing from past trends, he highlights that Bitcoin often experiences pullbacks after new highs but continues its long-term upward trajectory. Stay prepared for volatility and subscribe for the latest crypto insights.